Hello everyone, and welcome back to the channel. Today, we're taking a deep dive into Navitas Semiconductor, ticker NVTS. This stock has been making waves in the semiconductor sector, and if you're interested in tech stocks, growth opportunities, or just want to stay updated on the latest market moves, you're in the right place. Over the next 18 minutes, we'll cover everything from Navitas' business model and recent partnerships to stock performance, insider activity, financial health, analyst outlooks, and what all of this means for investors like you. Let's start by understanding what Navitas Semiconductor actually does. Navitas is a leading innovator in next-generation power semiconductors, specializing in gallium nitride, GaN, and silicon carbide, SiC, chips. These materials are considered the future of power electronics because they're more efficient, faster, and can handle higher voltages than traditional silicon-based chips. This technology is crucial for fast chargers in smartphones and laptops, electric vehicle charging systems, data centers, and industrial automation. Navitas' mission is to accelerate the electrification of everything, a big goal that puts them right at the heart of some of the most important trends in technology today. Now, let's talk about the recent news that's been driving NVTS stock. Over the past few months, Navitas announced a major partnership with NVIDIA. The collaboration is focused on developing an efficient 800-volt high-voltage direct current (HVDC) architecture for data centers. This is a huge deal because NVIDIA is a leader in AI and data center infrastructure, and their endorsement is a strong validation of Navitas' technology. The partnership is expected to drive multi-year revenue growth for Navitas, especially as demand for AI and data center solutions continues to surge. But that's not all. Navitas has also launched an industry-leading 12 kilowatts GaN and SiC platform, achieving 97.8% efficiency for hyperscale AI data centers. This kind of innovation is exactly what investors look for in a growth company. The company has also announced partnerships with other industry players, such as BrightLoop, to provide next-generation hydrogen fuel cell charging solutions. These moves highlight Navitas' commitment to staying at the forefront of power electronics innovation. Let's talk about stock performance. In May, NVTS saw a remarkable price surge of 149%, largely driven by the NVIDIA partnership and the launch of new power solutions. The stock rocketed from around $2 to over $8 in a matter of days, creating a lot of excitement among traders and investors. The trading volume exploded, with over 104 million shares changing hands on the day of the big news, more than 8 times the average daily volume. This kind of activity is a clear sign of intense market interest and volatility. However, since that surge, the stock has been on a bit of a roller coaster. It's come down from its highs, but it's still trading well above where it was before the NVIDIA news. For example, as of mid-June, the stock was around $7.19, which is down slightly from its previous close but still much higher than its pre-surge levels. The volatility is typical for small-cap tech stocks, especially those in hot sectors like semiconductors. Let's dig into the financials. Navitas is not yet profitable. Their net income for the last quarter was negative $16.8 million, and their EBITDA is also deep in the red. Revenue for the last 12 months was about $74 million, but there's been a recent drop, down almost 40% year-over-year in the first quarter of this year. Management has pointed to softness in key markets like mobile, EV, and industrial. Despite these challenges, Navitas has a very strong balance sheet. They have almost no debt and about $75 million in cash. Their current and quick ratios are excellent, meaning they have plenty of liquidity to keep operating and investing in R&D. Now, let's talk about insider and institutional activity. Over the past 6 months, insiders have been selling shares, lots of them. In fact, insiders, including the CEO, CFO, and major shareholders, have sold over 50 million shares, netting about $440 million. This might sound alarming at first, but context is important. Many of these sales were likely part of prearranged 10b5-1 trading plans, which insiders use to diversify their wealth without relying on material non-public information. This is standard practice and doesn't necessarily signal distress. Despite these sales, Insiders still hold about 31.8% of the company's shares, which shows ongoing confidence in the long-term value of the company. On the institutional side, the picture is mixed. In the most recent quarter, 90 institutions added NVTS to their portfolios, while 81 reduced their positions. This shows that while some big players are buying in, others are taking profits or cutting exposure. The net effect is relatively balanced, but it's clear that institutional interest in NVTS remains high. What are analysts saying about NVTS? The consensus rating is generally a buy, but price targets are all over the place, some as low as $1.50, others as high as $6. The average target is still below where the stock recently peaked, which tells us that even though analysts see potential, they're also cautious about the risks. Some analysts actually lowered their price targets after the NVIDIA news, citing ongoing market volatility and potential tariffs. Others remain bullish, pointing to the long-term growth potential of the GAN and SiC markets and Navitas' strong position within them. Let's talk about technical analysis and market sentiment. Technical indicators currently show a buy rating for NVTS, with a strong buy signal over the past month. The stock is highly volatile, so it's important to keep. Major partnerships. The NVIDIA partnership is a huge validation of Navitas' technology. Growth markets. Navitas is well positioned in high-growth markets like electric vehicles, data centers, and renewable energy. Strong balance sheet. The company has plenty of cash and almost no debt, giving them runway to invest in R&D and weather short-term challenges. Innovation. The launch of new platforms and partnerships shows ongoing commitment to innovation. Let's zoom out and look at the bigger picture. The global market for power semiconductors is expected to grow rapidly as more industries adopt electric vehicles, renewable energy, and advanced data center infrastructure. Navitas is well positioned to capture a significant share of this market, especially if their partnerships with companies like NVIDIA continue to expand. The company's backlog of wins, worth about $450 million, highlights significant future revenue potential, even if profitability remains a challenge in the near term. To wrap up, Navitas Semiconductor is a company with a lot of potential. Their GaN and SiC technology is at the forefront of the power semiconductor revolution, and their partnership with NVIDIA is a major validation of their business model. However, there are real risks to consider. The company is not yet profitable, revenue has been declining, and insiders have been selling shares. The stock is highly volatile, and while it could see more upside if the NVIDIA deal delivers, there are no guarantees. As always, it's important to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next update. Thanks for watching, and see you next time.